All right. Hello, everybody. Welcome back to another episode of The Market Open. It is Wednesday, July 24th, 3:46 p.m. Folks, this has been the day in the markets in a long time. Actually, updated stat in the title, it says worst day in the market since March of 2023. The S&P at some point when it was down 2.18% on the day had its worst day since December 22nd, 2022. So this has actually been one of the days in the markets that we have not seen for over a year now. It has been a while since we've seen this much red, and we have to analyze and go deeper on why it's red, what's going on, what this means for the future of stocks, and if this is really a buy the dip. Now, I'll start off by saying I dipped my toes in the market, did not deploy a ton of capital. I know some people that put in a lot of money, some people that also dipped their toes. I bought 10 shares of Palantir, 2 shares of CrowdStrike, 2 shares of Tesla, 2 shares of Nvidia. So nothing too crazy. I posted that on Twitter, so some of you guys might have seen it. Let me know in the chat if anyone else bought any shares today. Not a ton of capital, not really deploying a ton. I am a bit skeptical that this is the dip, even though all the metrics I'm looking at tells me this is definitely a big dip. And we're going to talk about some of those metrics and see if this dip actually further worsens, which all indicators are that yes, August is probably going to suck. There's actually a very specific chart that shows that from July 17th to July 2020 to July 24th, which is an 8-day period. Today is the culmination of that 8-day period. It historically is the worst time of the year, July 17th to July 24th, but July 4th or July 3rd to July 16th is the best time of the year. So if you believe in some of the historical trends, then this actually, we were due for a day like today where things would get bad because we went 8 days without having any type of real pain. And today we are absolutely seeing that pain that we are getting right now. Now, within all that pain, and we're going to go through a lot of charts, within all that pain, really the broader markets are not down that much. So let's look at QQQ to get started. QQQ, the NASDAQ, and I have some thoughts on why I think the NASDAQ in particular fell. Google and Tesla did a great job of allowing that to happen. But we're down 3.28% today. Tough day, not the best. Year to date, still up 15% over the past month. Now we're down 2%, but before today, we were up almost 4%. And over the past 6 months, up 9.2%. So you got to put a lot of this in context when you see the red. I know it sucks for our portfolios. And quite frankly, what it feels like to me is a random Wednesday in 2022. Do you remember in 2022, things would just fall 5% for the hell of it? We haven't had a day like that in a very long time. Most of the days that we've seen in the markets in 2024 within the first 7 months has been a slight dip if we did get any red, and then an intraday reversal, not a weekly or a monthly reversal, a literal 1 or 2 p.m. reversal from a 10 a.m. downswing. And then we were good to go. And all of us seemed like geniuses for buying a 10 a.m. or 11 a.m. dip because we were rich by the end of the trading day. And so we have not seen a day like this in a very long time, but I think we were overdue for that. S&P 500 down 2.14% on the day. This is the first red day in 365 days, down 2% on the S&P 541. I think, again, it was needed, and I'll talk about why it was needed, but still, S&P is up 11.6% for the past 6 months. Year to date, 14.65%. I know zooming out really isn't the thing that everyone wants to do on a red day, but it is important to understand that you can't go up forever. I think we all knew that. Palantir taking a mean hit today, down about 7% at 26.85. All of us knew Palantir at 29 was getting a little bit ahead of itself. Like, we all understood that. So seeing it fall back to 26.83 is not that crazy. And if it bounces from here at 27 and the market open, we talked about, okay, we needed to go below 27.5 to really see if there was a dip. And we got that at 26.82. Now the question is going to be, does it hold these levels or does it kind of bounce back up to that 27.5 level as well? Nvidia broke support at 116. Down below goes Nvidia from 116 to 114. Tesla still down 12% of the day. Didn't really get too much recovery. Now at 216. S&P again 541. Uber at 66. Squares down 7%. Meta down 5%. Rocket Lab down 2.96%. Enphase is up 14%. So if you bought the dip on Enphase over the past couple of months, you're doing really nice on Enphase today, and we'll talk a little bit about that. But their earnings call apparently went really well, which is why the street is buying that dip. Amazon down 3%, Snowflake down 5%, MicroStrategy down 2.5%, Coinbase down 4.5%. Now, Bitcoin actually has been a little bit of a safe haven today. If you take a look at Bitcoin, it's falling now, but Bitcoin for the majority of the day was green at 66.67. 66,670. Right now it's at 65.7. Still down, not down as much as the S&P, down 2%, or the NASDAQ down 3%. Bitcoin's down less than 1%, but some of the Bitcoin stocks are obviously taking a hit. Robinhood, a lot of people are asking why Robinhood's down. The market's down. I mean, Robinhood is going to definitely take a hit when Bitcoin slightly takes a hit, but also the broader markets, which, the whole point of the markets for Robinhood's revenue is trading. If that goes down, Robinhood will get hit. 2147 down 6.7% on the day. So let's get into the conversation on why. Why is this happening, and where is this going to go, and where do we think the market ends up going after today? So I'd love to see what you guys say in the chat, and let me know if you think this is a start of a multi-day dip, a multi-week dip, or if it's an isolated incident. Gun to my head, I would say we're in for a little bit more choppiness and pain. And the reason for that is because the ISM data we got this morning, which happened after the market open, I saw the manufacturing data, came in at 49. If you're above 50, you're expanding as an economy. If you're below 50, you're contracting. So we're definitely contracting. The expectations are of 51. So not only are we contracting way below expectations, which means this rate cut is probably happening in September. Now, the problem with the rate cut happening in September is that if the rate cut does happen, the narrative around the rate cut, I think, is incredibly important. If the rate cut is happening because inflation is coming down and we just need to ease on rates, that's very bullish. If the rate cut's happening because the consumer's weakening, and we got some earnings after the bell today, Chipotle, so we'll see from a bunch of companies at 4 p.m. If the consumer's weakening and the broader economy measured by ISM, manufacturing services data, et cetera, is contracting, then we're cutting rates out of not desperation, I would say, but out of a reaction. We're not doing it in anticipation of a strong economy. We're doing it in reaction to a weak economy. Now, I don't think the data we got today necessarily shows that rate cuts are happening because we're having a weak economy. However, if the narrative is that in September, then obviously rate cuts are not going to be into strength. They're going to be into a little bit more weakness. IWM, by the way, not being saved by the collapse, down 2.14%. So although the NASDAQ's down 3.5%, small caps, it's not like they're doing any better. And so that kind of thesis has been etched out a little bit right now, down 2.1%. Now, granted, having said all of that, I do not think this is stopping the broader bull market that's going on, because if you take a look at what triggered this decline, it really was Google, in my opinion. Google not being able to meet the numbers that they needed to meet is what got the market upset. Now, granted, they beat on EPS, they beat on revenue. They just didn't beat as decisively as the market wanted them to beat, and they probably weren't going to during Q2 of a year in which they're compared to really tough comps. The fact that they even beat on the top and bottom line was incredible, and the fact that they increased their CapEx spend, but the semiconductor stocks also took a hit today, just showed you the market did not want to buy stocks today. They wanted a reason to sell, whether it was CrowdStrike with the global outage. That was a big reason just in general to have a little bit more profit taking, whether it was Tesla and Elon not being excited. I don't think that's the best reason to sell, but that was a reason I think the market took to sell. I think the Tesla dip is a way big overreaction to something that wasn't it's something that was known right before at 250 or 270. I don't know why at 216 now the market feels like FSD is too far away. So I think that's an overreaction. And then I think Google not really hitting their numbers is also an overreaction to the CapEx argument around the semiconductor companies. So I feel September is going to be okay, along with October and November, but we're going to get some choppiness in between that. And I think it's hard to deny we get a little bit of choppiness because the broader markets in general are saying, hey, we do not feel comfortable buying some of these equities after they run up as much as they had. I mean, again, Palantir at 26.62. I know it sucks to see Palantir down from 29, but Palantir stock, if you look at it on a year-to-date basis, it's up 60%. I mean, like, this is just if it stayed here the entire rest of the year, I don't think a lot of people really could complain after a stock goes up 60%. You can't complain after the S&P goes up 15% when on average it does 8%. Same thing with Tesla. I know Tesla is still down year to date, but it's up from that 130 low to 217. So I think a lot of these companies, the market's looking at and saying, okay, they're up a lot. We know they're up a lot. Their earnings haven't really shown us a need to have multiple expansion. So why don't we take our profits? Now, the problem is the profit taking S&P, wow, 2.3. So we're going to end in 5 minutes, probably the lowest we've seen since December 2022. The problem with profit taking is that it's not being deployed anywhere else. I mean, outside of it going into end phase today, up 13%, but it's not going into small caps. So that thesis is not really holding up yet. It's not going into like under sort of names that are under the radar. I mean, Verizon's getting a little bit of love. That's a value play. I the REITs and the regional banks, they're down, but they're not down as much. They were actually green for the majority of the day. So some of that money is rotating, but a lot of that money is just going into piggy bank and it's waiting. And you kind of can't blame people for kind of protect their profits. The question is going to be, do we see a bounce tomorrow? I think tomorrow's market open is going to be one of the most consequential market opens of the year because it is the first market open after, oh, wow, SoFi's below 7. Holy crap, I didn't see that. It's the first market open after a real red day that we've seen. SoFi's 7.11 right now. I think it touched right below 7. But yeah, it's at 7.11 right now, down 4% on the day. And even SoFi, that's a small cap. That should be getting some momentum. They're getting hit as well. So this is the hard part right now in terms of what's happening with the markets, and I think we have to be able to kind of stomach it. So who bought the dip? Let me see in the chat. I might have missed some comments above, but who actually took advantage of the dip? I think today was not a horrible day to get your feet wet, but it definitely wasn't a day if you had $100,000 to bring into the markets. I think putting in 15,000 was a good kind of feeler bet versus putting in 95,000, because I do think a little bit more weakness can happen, especially as the narrative changes and people want to take up some of their profits. Angad said toots are selling to rebuy cheaper. Yeah, we'll find out when the 13Fs and 13Gs are out, if toots are selling or if this is more retail. I kind of think this is a little bit more institutional on the indices and maybe retail on the individual names. Obviously, when a name like Robinhood falls 6% or Palantir falls 8% and you're holding on to a decent chunk of it, and you were already wanting to sell at 29, or on Robinhood, you already wanted to sell at 24.50. Now you're just like, man, I missed it. I still have some profits. I should take my money and run. And I think a lot of times that happens with retail. I would be surprised if institutions are actually stepping in and saying, hey, these are things that are on sale. Shopify as well, down 5% from the morning, 59.31, right back to where it was, or close to where it was after earnings. Meta as well. Yeah, Meta took a nasty fall. Meta right here, look at that, 461. Now, Meta, I'm a little scared about Meta because if Google increased their CapEx, Meta already said we're increasing our CapEx. The problem is the monetization of that CapEx expenditure has not been realized, and it probably won't be for at least another year, I would say, or at least another 2 quarters. And so Meta's going to say the same thing. They're like, hey, we're spending money, but like it's going to take us time. Believe in us, even though we messed up on the metaverse. This AI stuff is real. And so the market's going to have to digest that. But it begs the question, if the stock's up 35% year to date, do you buy it if you see that news? So I guess we're going to see. Hey, Amit, thoughts on CrowdStrike offering $10 in Uber Eats as a sorry? Yeah, so this was the funniest news of the day. I mean, this is just hilarious. I don't know if anyone saw this TechCrunch article. CrowdStrike has offered a $10 apology gift card to say sorry for the outage. This is real news. Some of it is a little wishy-washy on the details. Some of them, like, it's not really to the customers. Some of them are to the partners that are like deploying some of their software. So it's not exactly to the customers themselves, but it's just the headline is hilarious. And the fact that they even thought, hey, we should give anyone a $10 apology gift card. I mean, it's got me to the point of thinking, if my girl's ever mad at me, I'm just going to give her a $10 apology gift card. And I think that should resolve most of the concerns, because obviously $10 in this economy with this level of inflation is enough. But that was not good news for CrowdStrike. So adding insult to injury, CrowdStrike down another 5% of the day. CrowdStrike broke the 260 trend, which was really important. And so we'll see how that one goes, but that one's down 4% on the day as well. All right, Wednesday, July 24th, we got a bunch of earnings. The stock market is now closed. All right, we've got earnings on deck. Yes, $10 can barely buy us lunch. Dude, $10, the value of $10 is like declining pretty dramatically. I can't wait till I go to India in October, because I remember, dude, for like $10 you can get a face massage. Like they do, like not only just a haircut, but like it's a lot for $10 in India, because obviously the currency just matters more. $10 in India is basically like 1,000 rupees, which is their currency. So you can live a little bit more like a king there. All right, so we have IBM on deck. We have CMG, Chipotle. That'll be good for the consumer. Definitely need to know that. I think we have Ford on deck today. What else do we have on earnings? What else? We have Ford, Chipotle, IBM, Waste Management. That one kind of matters. I think those are the big ones. Oh, ServiceNow. Oh, ServiceNow is a big one. That's a big one. Okay, so that will tell us if Palantir ends up doing okay. Not because they're the same business, but because there is a little bit of correlation in terms of IT spend. And ServiceNow is one of the leading software companies that indicates what happens with software. And then WM, Waste Management. All right, here we go. These are the earnings. Let me know if anyone has positions in any of these stocks, but this is what we're looking at on the watch list. And we'll see. We'll see what happens. We'll see what happens here. Okay, IBM's down a little bit after hours. I'll go back to these because it'll probably take a couple minutes for them to come out, but let's see how the market ended. Mag 7, Apple's down 3% on the day. Wow, 218. I didn't look at Apple all day, actually. Microsoft, 428. Wow, that went down 4%. Okay, so Microsoft actually took a beating. Meta down 5%, Google down 5%, Amazon down 3%. Amazon was the one that took the least of a hit. Nvidia down 6.8%. That's $160 billion in market cap. Tesla down 12.3%. Tesla took it the worst. And then Palantir ends the day down about 7%. It's up a little bit after hours, and then Robinhood takes it down 6.38%. Coinbase as well, down 5% on the day. Bitcoin right here, 65,721. Kamala Harris will not be attending the Bitcoin conference. There was a rumor of that a couple days ago. That is not going to be happening because she rejected to go to the conference. HIMS was down 1.19%. Palo Alto was down 3.37%. Zscaler down 5% on the day. Rivian down 7% on the day. The cruise lines, how did they do? CCL was down 5% on the day. So pretty much everything got hit. You really had no safety unless you were in end phase. And to have that safety, you either have to be really good at day trading it a couple days ago, or you have to be taking the pain of end phase for the majority of the year to get some of the sunshine today. But get it? Sunshine, solar? Damn. I'm smart, dude. I thought of that on the spot. I'm smart. But if not, then you really had no love with Enphase. Okay, we don't have any earnings yet. Nothing's out. KCLA, June, you mentioned these companies that no one knows. What the heck is KCLA? Does anyone know what KCLA is? Is it just me? Am I the one who doesn't know any company other than Palantir or KLAC? Okay, I'll put it. No, it's KLAC, June. I don't think it's a K. Yeah, it's not KCLA. It's KLAC. Yeah. Oh, KLA. That's the ticker. Thank goodness June is in the chat, dude. She lets us like find out and learn about what all these companies actually do in the world besides Palantir. Does anyone know KLAC? It's a semiconductor stock. It's a semi one. Okay, I did not know that. If it is a semiconductor stock. HP. Well, that's not HPE. That's not Hewlett Packard. That's a different one. Yeah, those looked like the main earnings today. Okay, do we have any numbers yet? Yeah, IBM. We got IBM on deck. IBM's down 1%. So let's see if we can pull up some numbers. But as of now, nothing out. It might take till like 4:10 to get some of the other numbers. KLAC is a semis company. Okay, so that'll be important in the broader semis ecosystem. Let me actually just play one clip talking a little bit more about macro as I pull up the numbers, because they're not going to be out for like another 2 minutes, and then we'll get into all the numbers in a minute.
Advisor Stephanie, of course, a CNBC contributor.
Trading signal. And that's because though we are seeing a little bit of uncertainty around the path of the economy ahead and really the concentration risk that these large cap tech names provide, overall, earnings so far have been pretty good. It's only 10% of companies reporting in, but outside of the sectors like industrials or materials where you expect to see a little bit of weakness, things look fine. And it's our expectation that the equity market rally can look through days like this, as long as that's the case and as long as employment remains in good shape. Now, what this type of uncertainty does tell us is that when there is a transition point, it's going to happen quickly. And so rather than, to Lizanne's point, moving into small caps or lower quality segments of the markets, we're taking gains and putting them to work in fixed income where we can lock in higher rates. I particularly like short duration high yield bonds in this context.
Okay. How close would you say we might be to that point where
no numbers yet, guys? Probably in a couple minutes we'll get numbers.
Employment is no longer okay.
Our expectation, it's the magic question, actually.
Yeah.
It's, our expectation is that we start to see that weakness in employment looking much clearer, jobless claims ticking higher by the end of the year. But looking at the leading indicators of employment, all of which have been slowing, they've been slowing for 2 years. So it's incredibly difficult to call. And it's an environment where, with cross currents like what's happening with the Fed, with earnings, with politics, portfolio construction, as boring as that sounds, is so important. Most investors, if they haven't made meaningful changes or if they've been excited about what they've seen in the equity side of their portfolio, are probably overweight equity relative to where they should be heading into this late stage of the cycle.
And probably overweight the largest ones, I would assume, if you're in the index. Steph, give us your read on earnings season to date and the reactions. Obviously, a lot has to do with the setup.
Okay, we got at least some reaction so far. I'll try to get the numbers. Ford, as Drago says in the chat, is wrecked right now. KLAC, this thing June mentioned, that's up 5%. So that's showing some love. Ford's down 7%. So let's pull up Ford and see what's happening there. Don't have Chipotle yet. Chipotle, IBM, and ServiceNow. Those are the ones that I really care about. By the way, isn't IBM up year to date? IBM had like a good year, right? I feel like IBM... At one point, IBM, hold on, let me look at theirs. IBM had a little run this year. IBM year to date. Yeah, it was at 161, topped out at 190 in 3 months, and then it came back down to 160, and now it's at 184. So it's up from 160 to start the year. So IBM hasn't been too bad. Okay, Ford. Ford is down 7%. What's going on with Ford? What is going on with Ford? Okay, I think I have their numbers. Do I have them? Yes. All right, Ford. Second quarter revenue of $47.8 billion. Net income of $1.8 billion. Quarterly EBITDA of $2.6 billion. Hybrid sales are up 34%, representing nearly 9% of the company's mix. Expectations for full year adjusted EBITDA unchanged between 10 and 12 billion. They reduced guidance last time, and that's what took it down. I'm not sure why they're down again. Now they're down 8%. ALGN, Align Technology, this is down 17%. This is an $18 billion company. Holy crap. That one took a beating. I'll get their numbers in a second, but that one is down. The sad thing about like a red day and going into earnings on a red day, IBM's up a little bit after hours. We got a green candle right there, is that it's hard to like get the market to be excited, even if you have good numbers, if the sentiment is down. And the problem is you don't want to see this continue for the next couple of weeks, because so far earnings have been great for the S&P. If earnings continue to be good, but the sentiment sucks and all these stocks just keep selling off, then it'll be interpreted as a bad earnings season, which on a macro level is interpreted as, hey, is there like an issue, a weakness, etc. And that just leads to like a really, really bad path. So hopefully these companies just have really good numbers that doesn't allow that to happen. ServiceNow is up 2.5%. Okay, that's really good. Let's see if it can hold that. That's very important for Snowflake, Datadog, Palantir. That's good for a lot of those companies. Same thing for IBM being up 4%. So the two companies that matter for software and IT spend, they're green. I'm going to try to get their numbers in a second, but that's important that they are holding on so far. Okay, I think we have some numbers. Yeah, let's get into Ford, and then we'll get into some of the other numbers. Here we go. Here's what we got.
3 divisions, starting first off with the EV division, a loss of $1.14 billion for the quarter. By the way, that means they are losing in this quarter about $44,000, $44,000 per vehicle, an improvement over the first quarter, but still a big loss. The ICE division, internal combustion engine vehicle business, a profit of $1.71 billion. Commercial vehicle division, a profit of $2.56 billion. That's really where Ford has been doing well. Then you look at their guidance.
Damn it, Service is down 4% now. ServiceNow is down 4%. I'll get the numbers on that.
Raising their 2024 free cash flow guidance by $1 billion to a range of $7.5 to $8.5 billion. And then you've got the 24 EBIT guide staying the same at $10 to $12 billion. Within the divisions, a couple of changes here. The ICE division, the profit guide has been trimmed by $1 billion down to $6 to $6.5 billion. Why? Growing warranty costs, which has long been a bugaboo for Ford. They are raising their profit forecast for the commercial vehicle business beat to $9 to $10 billion.
Consulting business, which years now per share came
And Ford missing on the
3.5%. IBM delivered a beat on the top and bottom lines for its Q2. Revenue came in at $15.77 billion versus the $15.62 billion consensus. Earnings per share came in at $2.43.
Okay, we'll go back to that. Chipotle's up. Chipotle is up. Chipotle, wow, up 7%. Okay, Chipotle getting some love. ServiceNow now is up. It was red. IBM is up. Chipotle's up. ServiceNow is up. So Ford is down 10%. And we just learned why. They're losing 44,000 a vehicle, and that hasn't really changed since 2 quarters ago. Chipotle's up. I'll get the numbers on that. IBM is up, and ServiceNow is not up a ton, but it's holding up. Chipotle. Okay. What is going on with Chipotle? Well, a couple things on ServiceNow. They just acquired an AI company called Raytheon, not the defense contractor, Raytheon, Raytion, to enhance generative AI-powered search and acknowledgement capabilities on the platform. It kind of sounds similar to Nevo, which is what Snowflake acquired just as like a search platform. But they just acquired a company. Also, the ServiceNow chief operating officer resigned after a probe into hiring of a former Army executive. That is an interesting story. We'll probably get details on that in a bit as well. Okay, ServiceNow, we have revenue of $2.6 billion. Estimates were 2.607. They came in at 2.627. EPS of $1.26. That's good. Adjusted free cash flow, $359 million. Net income, $262 million. And adjusted operating income of $720 million. ServiceNow is now up 2.5%. Ford's down 10%. Chipotle is up 10%. So let's get Chipotle numbers because that one is wrapping up pretty nicely. You get it? Wrap up burrito. As soon as I make that joke, of course, Chad joins. It's like he just knows. He has this bat signal or something when I'm trying to make a joke that he comes in. But Chad says, what do you do when you can't build? You buy. That is correct. And that's why we're seeing software companies pull up acquisitions more than we've seen in a long time. So Chipotle right here, adjusted EPS 34 cents versus 32 cents, revenue $3 billion versus $2.94 billion. That's not a massive beat. So I don't know why Chipotle is up that dramatically. They had to announce something. Chipotle up 8%. Now, granted, it was oversold going into the earnings, if you looked at the RSI, and also if you looked at where they were trading at the beginning of, or like in March. But maybe that's why it's, getting a little bit of a bounce. No numbers yet on their website. Let's see if CNBC has more coverage. But Chipotle is up. IBM as well, continuing to gain momentum. ServiceNow. Okay, so we have an update on ServiceNow. Oh, we have Chipotle. All right, here we go. Let's see. Here we go. We got Chipotle. They are definitely not getting this because of free guac. They charge an arm and a leg for their guac.
Going to happen for everybody.
It certainly seems like some analysts were hoping this would be an inflection quarter for consulting. We'll dig into that more later in the hour. But in the meantime, Chipotle earnings are out, and Kate Rogers has those numbers. Kate.
Hey, Morgan. Yeah, Chipotle stock really rallying on this better than expected report, up more than 7%. Now we'll take you through the numbers for Q2. EPS beats here, 34 cents adjusted, better than the 32 estimated by analysts. Revenues also beat $2.97 billion. That's better than the $2.94 billion estimated. Same store sales also came in better than expected at 11.1% growth, higher than the 9.2% projected by analysts. Its restaurant level operating margin was at 28.9%. That's up 140 basis points. CEO Brian Nichols said the quarter was, quote, outstanding thanks to a few things: brand marketing, including chicken al pastor, returning to menus. He also noted that training around throughput and speed of service has really paid off for the company with 8% plus transaction growth. That's a big number as well. Chipotle also reiterated its guidance for full year comp restaurant sales growth in the mid to high single digit range. And Chipotle CEO Brian Nichols will join us next for more on the quarter, guys. Back over to you.
Wow, that stock 10% higher, also higher at the moment. ServiceNow up more than 2.5% in overtime. Here are those results. So major news, first of all, in ServiceNow's release: a beat on both lines for Q2. A missed in line on Q3 for the subscription guide with management pointing to currency headwinds as the culprit there. At the same time, though, ServiceNow is raising the full year subscription revenue guide, which would imply Q4, by $33 million at the midpoint to offset an incremental $20 million headwind from currency. So that would be 22% year-over-year growth in constant currency. Now, here's the big non-financial news in this release. The departure of ServiceNow's number 2, CJ Desai, the President and Chief Operating Officer, this after the determination that company policy was violated in last year's hiring of Raj Iyer, the former Chief Information Officer of the U.S. Army, who had been leading some of ServiceNow's government business development efforts. I spoke with ServiceNow CEO Bill McDermott about all of this, bring you some of that perspective in just a moment. But first, let me get you the numbers. ServiceNow's overall Q2 revenue comes in at $2.68 billion. That's better than the $2.61 expected. Subscription revenue, $2.55 billion, above the top end of the guide at $2.53. Earnings per share, $3.13 versus $2.83 expected. On the subscription guide for Q3, ServiceNow is giving a range of $2.66 to $2.665 billion versus expectations of $2.67. So roughly in line there. Now on the backlog of business, CRPO, or current remaining performance obligations, ServiceNow reports $8.84 billion versus $8.68 perspective. Now, as I said, I did speak with.
Okay, so ServiceNow numbers are super bullish for Palantir. IT spend is there. Palantir is down after hours even more, 26.58. So Palantir getting a little bit of a beating, which is okay. We knew that 27.28 was getting up there. But ServiceNow putting up these numbers is actually very nice for some of the SaaS names. Let's look at SaaS real quick, and then we'll get back to Chipotle. Yeah, SaaS is green after hours. Salesforce is green. Oracle's green. Confluent's green. Snowflake's up 1%. Palantir is one of the only ones that's red. CrowdStrike's up a little bit. Adobe's up, and then ServiceNow here up 5%, which is not bad. Now, ServiceNow stock year to date is up 6%. So really it was down, I guess, before this. Over the past year, it's up 26%. But up 6% right now. Frank Slootman was the former CEO of ServiceNow. Then he went to Snowflake. Then he left Snowflake. So it's one of those, core SaaS companies. But obviously they're not getting the type of premium that Palantir is getting currently right now. Now their market cap is $149 billion, much larger company, but they are up 5% on the day. Okay, so Waste Management, slightly green. I don't think we have their numbers yet, but we will get it in a second. Ford is down 10%. They are not getting a bid at that 1230 level. Chipotle, 13%. Wow. Someone said Bill Ackman has a big position in Chipotle. He does. The thing is, he's been selling a lot too, though, along with insiders. So he still has a big position, but he's definitely taking profits this year. At one point, Chipotle was up 35%. It was rivaling like Meta's gains for the year. So when it fell, it kind of made sense, but seems like the numbers are strong enough. You know what I think helped Chipotle? Remember that TikTok controversy where they weren't giving you enough chicken and like everyone was recording the workers? I think that got more people to go into the stores just to see if like you would actually get a good amount of chicken or not. And again, all publicity somehow helps at the end of the day, even if it sucks. And maybe that ended up increasing some of their sales as well. Enphase is up even more. Yeah, we looked at Enphase. Is it up more after hours? Enphase down a little bit. It's up 12% on the day. So Enphase was one of the only green ones for the day. Robinhood up after hours at 21.55. Coinbase up a little bit. Carnival Cruise up a little bit. Palantir is still taking a beating after hours. Waste Management, we should be getting soon. Ford still losing 44 grand a car, and that's why the street's not happy. And then IBM up 3.4% as well. Okay, let's look at IBM because we need to see some of their numbers today. I'm happy IBM is up because that shows that this year and the gain they've had has not been too bad. IBM has had their best year since 2011, so it's really had kind of a renewed year, and it's not been too bad for them. Okay, let's see quarterly earnings, IBM. Okay, let me see if I can get their numbers, but IBM is one that we definitely should look at as well. Press release, is this it? Okay, here we go. We got it. So here's IBM. Let's look at IBM. I've actually never had Kava. I know a lot of people are saying that Kava is better. I've never had it. SMCI is below 700. Oh boy. SMCI after hours 698. Nvidia after hours 114. So Nvidia a little green after hours. All right, IBM CEO. We had a strong second quarter, exceeding our expectations, driven by growth in both revenue and free cash flow. We continue to see that clients turn to IBM for our technology and our expertise in enterprise AI. Our book of business for generative AI has grown to more than $2 billion since last year. Given our first half results, we are raising our full year view of free cash flow, which is now expected to be more than $12 billion. So that's nice to see. AI is growing in terms of their backlog, and free cash flow guidance is growing as well. Even if it's not growing dramatically, it is growing, showing that AI is a tailwind for IBM. And whether you own IBM or not, you just want to see companies saying that AI matters. Revenue growth, $15.8 billion, up 2% year over year. Software revenue up 7%. Consulting revenue down 1%. IT revenue down 1%. Profit margins, 56%. That's up 180 basis points. Not bad. Year-to-date net cash from operating activity, $6.2 billion. That's down $200 million. Free cash flow is up $1.1 billion at $4.5 billion as well. Okay, the main thing I wanted to hear from them is that AI is a tailwind, and it looks like AI is a tailwind. And increasing that free cash flow is also very important now at $12 billion. I don't know what the number was before that, but the fact that they even had the ability to increase it means that demand seems to be solid, at least for IBM. Chad says, literally, I've seen 0 people working with IBM on AI. So the CEO says our book of business for generative AI has grown to more than $2 billion. Either that's him attaching AI to $2 billion worth of demand that they got, which is very possible. Potentially, they could have, people could be buying IBM for another reason, or maybe there is some AI moat to IBM. Nvidia 115 after hours. IBM up 4% still. Chipotle, wow, 14% on the day. Market really liked their earnings, and we have to look at their earnings because all we saw was a slight beat on EPS and revenue. It wasn't like it was some gigantic beat. Same store sales was up, which I guess the market liked. This one felt more like it got oversold going into earnings versus the earnings necessarily justified this big of a move. ServiceNow up 6%. Okay, that's good. That is really good for IT. Snowflake, Datadog, Palantir, right before we see the big SaaS names report. Oracle, Salesforce, they all have like another couple of weeks until they report. It's nice to see ServiceNow at least beginning to lead the way. IBM AI moat, finally a good joke, Amit. It's an oxymoron. I met with Chad today along with Shay. You guys, he was on the podcast the other day, and Chad got to explain to us a little bit more about what's working with Palantir. We're not going to do that Twitter Spaces, guys, I said this morning, because tomorrow's the Bitcoin conference, so we'll probably wait till next week. But maybe weekly or bi-weekly, we do a Twitter Spaces with a bunch of people, and we get Chad to basically explain to us why Palantir is so valuable. Because a lot of that stuff goes deeper into the technical aspects that I think is so important for everyone to have a better understanding of. Chipotle, 14%, IBM up 4%. Let's go back to CNBC and see what they're saying. And then we'll go from there. Let's get some coverage on ServiceNow, and then we'll keep going. Yeah, SMCI is taking a nasty dip right now as well. All right, here we go.
For sure. And I think obviously the setup, the stock after the close is regaining what was lost, plus $1 during the regular session. So clearly just the message that things remain on track. What we thought we were going to deliver, we actually were able to produce, is probably good enough for the moment. I see that, kind of across the board. Chipotle, it's a clear beat, but also a similar situation where you had a really kind of struggling stock going into the report, and it's kind of a steady as she goes quarter into that.
Okay. Well, we've got Las Vegas Sands earnings out as well. Julia Borston has those numbers. Julia.
Morgan, Las Vegas Sands missing on the top and bottom lines. Revenues of $2.76 billion, falling short of the $2.8 billion that analysts estimated. Earnings per share of 55 cents, a penny light of estimates. You see shares now down.
Las Vegas Sands is a casino, for those that didn't know, because I obviously knew that. I didn't just Google it, but yeah, it's a casino.
Down about 4%. Now, the results in Macau did weigh on the quarter. The company saying visitation to the market remains well below levels reached prior to the pandemic. And Marina Bay Sands, or MBS, that's the company's Singapore business, that was in line with expectations after some solid beats for that division in recent quarters. Company also announcing it's bought back $400 million of its common stock, with the remaining $645 million under its share repurchase program. Back over to you.
All right, Julia Borson, thank you. Shares down 3.5% right now. Well, KLA earnings are out. Seema Modi has those numbers. Seema.
Morgan, a sizable beat from KLA Tencor, the semiconductor equipment player, reporting earnings of $6.60 adjusted. The estimate was for $6.15, revenue topping consensus. And what's most important here, of course, will be revenue outlook for the first quarter, which is the current quarter for KLA Tencor, well above the street estimate, $2.75 billion. Analysts were expecting $2.6 billion. At this time, it seems like analysts are no longer just wanting that beat and raise. They're really looking at and quantifying the raise that companies are delivering. We're looking at the stock up here by around 2% in overtime. CEO Rick Wallace saying, we are encouraged by the early signs of a strengthening market environment for our customers at the leading edge and are increasingly confident in our plan for steady improvement. Guys, back to you.
All right, Seema Modi, thank you. Nicole, thank you for joining us.
All right, so I'm pulling up Chipotle's numbers. They haven't. Oh, yes, they just did it. All right, so here we go. Now it's time to dig in and see what's going on with Chipotle. So revenue's up 18% year over year to $3 billion. Wow. Dude, a restaurant, 18% growth. That's better than some tech companies. That's not bad at all. Comparable restaurant sales increased 11%. Operating margin was 19%. That's up from 17%. That's probably what the street really likes to see because margins on restaurants are not easy to get. Restaurant level operating margin was 28.9%. That's up 140 basis points. Opened 52 new company operated restaurants with 46 locations as well. CEO, the second quarter was outstanding at successful brand marketing, including the return of Chicken al Pastor, drove strong demand to our restaurants. Our folks in training throughout paid, we were able to have stronger demand trends with terrific service and speeding, driving over 8% transaction growth. We did the 50-for-1 split, so that happened as well. And then again, revenue of $3 billion. Net income was $455 million, so about 3 cents a share, which is not bad. They repurchased $154 million of stock at an average price of $63. They still have about $647 million left to repurchase. For 2024, they want 285 new restaurants, full year compatible restaurant sales in a mid to high single digit range, and an estimated underlying effect full year tax rate between 25 and 27%. See, this is why the market wants Trump, because that full year effective tax rate goes down to like 20% if Trump lowers it again, which means obviously more money returned back to shareholders. But the question is going to be, if he ends up winning. So, and shrunk their portions. Yeah. That's what the CEO didn't mention. They shrunk their portions. That's why they're saving on costs. No, but in all seriousness, this is not a bad quarter. 18% growth. Although they didn't definitively beat expectations, they did beat, but it wasn't like some gigantic beat. 18% growth is kind of crazy, dude. I mean, how many companies are compounding 18% year over year, especially when you're building off of a $2.5 billion base? Jeremy had puts on Chipotle. I didn't know that. Jeremy had puts on Chipotle. Interesting. See, puts on Chipotle, I wouldn't say that's a horrible idea. The problem was they fell 15% after the peak in March. So the time to get puts was, I think, when it was a bit higher versus going into earnings. But that is what we have in Chipotle. What is his website? Just go to Chipotle IR and then you'll see the website. Okay, so Chipotle still is up 10% right now, even though it's giving back some of the gains. IBM is up 4%, ServiceNow up 6%. Waste Management slightly green. Let me see if I have those numbers. Waste Management, for those that don't know, is a trash company. They if you're in the United States, they definitely handle your trash. I mean, they handle pretty much the entire country's trash. Their numbers are not out yet. I think it's at 4:30, so hopefully in a minute we get their numbers. And we'll see with Waste Management. Do you think Jeremy closed his position? Okay, that makes sense. He closed half the position today. Well, he should. I mean, he should have made a profit today if he closed them, if he bought them up before. Are they a trash company or a waste management company? They're not a literal trash stock, but they're a waste management company. They're down a little bit at the bell, or not at the bell, at 4:30. You got a red candle right there to 215. Mag 7 are up. At tomorrow's going to be so important, dude. I am so curious to see, does the Mag 7 rebound? We'll get to WM in a second. Max 7 are all green after the bell. Nvidia's green, Amazon's green, Google's green, Meta's green, Apple's green, Microsoft's green. Even if it's a little bit, we have some buyers. Tesla still red after the bell. Tesla below 200 wouldn't be surprising. I don't think we see that, but it's possible if the S&P falls another 5%. I mean, it's very possible. But I think if you wanted to sell, you got out today, and now we'll see people step in tomorrow. Waste Management still down. No numbers yet. We should get that in a second. And then we'll see what they got. Yeah, no numbers yet for Waste Management. Jensen sold another 120,000 shares. Okay, that's getting a little annoying, dude. That means wherever I read that Jensen was done selling 2 weeks ago, or whoever told me that, that was wrong. That was absolutely wrong. I mean, this guy, or he's legit selling out of his personal, like just his personal stock. It's not like part of some scheduled plan, and he's just selling to sell if he wants to, which, I mean, he's allowed to, but that is not the best. Meet Kevin thinks it's going below 180 on Tesla. Well, to give Meet Kevin some credit, he did call the run to like 230 correctly, and he loaded up with calls at 180, right? So now I guess he's trying to double dip and see if he can. Now, if he actually starts shorting it, we'll see if he's really serious. Weight Management is down. It's down 2.4%. But he did get the June swing on Tesla correct. Okay, we're down 2% on WM. We're down 2% on WM. Okay, here we go. Waste Management. I'm going to read what the CEO said. Based on our great performance to start 2024 and our confidence in the strength of our business after the first quarter, we raised our full-year outlook. Wow. And free cash flow by $100 million. Our second quarter results are tracking to this higher trajectory and reflect continued momentum on our pricing programs and cost optimization efforts. Revenue grew by 5% this quarter, and our disciplined focus on leveraging our people, technology, and process to reduce our cost to serve continue to drive margin expansion. Why is it down? That is weird. They are raising guidance, which a lot of companies are not doing in Q2, and they're growing revenue at for their size a healthy rate. They also have a 1.3% dividend on Waste Management. Revenue's up 5%. Operating EBITDA grew 10% to $1.62 billion. Free cash flow $1.6 billion. Raised operating EBITDA to 6.3 to 6.25 billion or 6.52 billion. It doesn't look like a horrible quarter at all. Not on Waste Management. Yeah, stock is still not really reacting. I mean, it's down 2.2%, but not a big reaction there. ServiceNow still up 5%, Ford down 12%, Chipotle up 10%, IBM up 4%. Some people said Chris closed out his puts too quickly. I agree. If Chris had just had a little bit more balls to hold on to those puts for another week, he would have made some money. Now, the problem is he has to be below 26 by January 2025. He could have closed them early, but he just wouldn't have made a lot of money. If it's below 26 Palantir in 6 months, then he would have made like 20 grand or whatever. But is Palantir below 26 in January? I don't know, dude. I don't think so. I think it's above 26 January. So that's the problem with his puts. But he at least would have been able to break even on some of them, or maybe make a little profit. Okay, let's get back to CNBC, see what they're saying, and then we'll keep going from there on some different results. Here's some updates on Chipotle.
Now, tell us how you're managing this level of transaction growth, which was up by more than 8% this quarter.
Yeah, obviously, really proud of the team and the results that we were able to achieve.
This is the CEO, by the way.
Even the second quarter, the comp, the 11% comp was driven by 8 percentage points of transaction growth. And that's really a testament to our operators executing great throughput, our restaurants being staffed correctly, being deployed correctly, and then our marketing really hit with some terrific menu news around Chicken Al Pastor. So it really was a terrific quarter. I've said this over and over again. The value proposition for Chipotle really hinges on great culinary, provided great customization with terrific speed, and then obviously one of our key equities are these generous portions that we provide. And I think our teams have done a fabulous job of doing that.
And Brian, last quarter when we spoke, you had shared that you saw transaction growth in every income cohort. Has that stayed steady in the face of cheaper competition, particularly for the lower income consumer?
Yeah, we're very fortunate to continue to see the strength of transaction growth coming from every income cohort. Obviously, the peak of the quarter for us was in April. I think we talked about this on our last earnings call, where we really just, hit it on all cylinders between the launching of Chicken Al Pastor, our throughput really elevating because, as I've talked about, that's kind of peak burrito season. But yes, we've continued to see really nice, performance out of every income cohort, and I think that's a testament to, great culinary, great customization, done at great speed.
Brian, it's Morgan.
So Chipotle, we'll get back to that in a second. Chipotle is down right now from 14 to 7%, as Ricky notes in the chat. So giving up its gains. This is the only reason this is kind of scary, dude, is because if the narrative starts forming in the next coming days as we approach big tech earnings that like things are getting bad, it's going to get a little rocky, man. It's going to get a little rocky. IBM giving up a couple of percentage points. Even ServiceNow went from 8% to 5%. When the narrative shifts, dude, like this is the unique thing about 2024. The narrative, the vibes have been to buy. Like the narrative has been you're missing out. You need to get in. Now, if the narrative switches, and we'll see tomorrow if we open red and continue for a second day in a row of being red. If the narrative goes, hey, protect your money, protect your gains, get out, XYZ, consumer weakness, Fed, blah, 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 blah. Then it's like, I don't know. Then everyone's hoping for the Santa Claus rally and hope to God it comes if we get some weakness. But maybe enough dip buyers step in. We definitely, we're now fearing the index. Yeah, it makes sense. We're fearing the index. Tom Lee's thesis, I don't think is wrong at all. I think his argument is correct, and rate cuts will be coming, which will be helping. So there's a lot of arguments there. July is gone. All the gains we had in July are now gone as of today, which is okay. But that is gone. Obviously, the year has gone well, even if July is not the best. So now we'll see how bad it actually goes. Chad just sent something. What the heck did he just send? What did he send? Oh, I gotta share this. Where's CrowdStrike after hours? CrowdStrike's up a little bit. Oh my gosh, dude. Oh my gosh. I'm really curious. What does the narrative become? This market is run on narratives. If narratives becomes bad, then market might end up taking a tumble. Okay, so this guy says, hey, sorry you missed your grandpa's funeral and had to sleep in an airport for 2 days. Hope this $10 gift card makes up for it. This is basically what CrowdStrike said today. Chad said, I'm just one CrowdStrike outage away from a Bahama mama. So his Chad's power went out where he lives, which I don't think is because of CrowdStrike, but it might be because of CrowdStrike. $18 for a smoothie because your power goes out is insanity. This is why we still have inflation. Now, I know it's the DoorDash fee, but still, like $18 for a smoothie is just a bit ridiculous in this economy. It's like, it's no wonder the consumer's struggling, dude. $18 for a freaking smoothie. Yeah, the CrowdStrike, the $10 gift card news was not good, dude. That was such bad PR. And even if it wasn't like accurately reported in terms of how they gave out the gift card, if it was to certain people, the fact that it's $10 is just a slap in the face. It's just not good. Bank of America, $25 billion buyback, along with raising their dividend. So that's good. The financials are doing okay. Really, financials didn't even take that big of a hit today. XLF down 1.37%. When the NASDAQ falls 3% and you only fall 1%, that's not too bad. SMCI, by the way, 700 after hours. So financials are doing good. Regionals are doing good, but tech is selling off. Tech is absolutely selling off. Jed said that's how DoorDash makes money. Yeah, that is, but it's just, dude, it hurts to pay some of those fees sometimes. Like, it's a lot. DoorDash down 3% of the day. Their stock has never been an interesting stock to me. Like, DoorDash made the VCs rich, but they didn't really necessarily help shareholders. They're up 6% year to date. They're up 20% over the past year. Over 5 years, they're down 40%. They did IPO during ZERP. So 2021 was when they came public. But they've never been the most exciting company to me. The fun fact is the CEO of DoorDash is on the board of Meta. So he and Zucks are really good friends. But obviously his stock not really performing like Meta's has. Ford down 11%, Chipotle still up 10%, and then IBM down 2%. ServiceNow is up 5% on the day. Some of the gift cards weren't even working either. So some people reported that they tried to plug in the code to the gift card. It just didn't work. So yeah, it was just not a good look at all. Someone says this was their worst day in the market. I hope that's your worst day in the market this year in 2024. Or maybe you just started getting into the market in 2024, because I'm sure some of us who lived through 2022, I'm old enough to say I lived through 2022. Isn't that crazy? I can't say 2008 or the small recession we had 2018, like mini 3-month crash, even though my friend was trading Snapchat options at the time. I remember this. It's so funny because now I understand why he lost $18,000. But at the time, he was betting on Snapchat to be like XYZ dollars by XYZ date. And that was in December of 2018. If you guys remember, that was when J-Powell raised rates and like shit hit the fan. I didn't even really know what was happening. I wasn't that into the markets, but my friend was trading. And I called him one day over Christmas break. I was like, yo, what's up? He's like, I'm depressed. I was like, why? He was like, I lost $18,000. I was like, how the fuck do you lose $18,000? He's like, I bought this like thing in the stock market on Snapchat and it didn't get there. And I'm like, damn, dude. Like that sucks, but like you want to hang out? Like it's like I was like, how do you lose 18? He bought weekly options. So they expired obviously worthless on a Friday, and he bought them like 2 weeks before they expired. So, he was just getting into the options world. But yeah, if you've been through 2021, 2022, today is a tough day, but it's just not as bad of a day as I'm sure most people have experienced in their life if you didn't start, getting into the markets in 2024. 3% down on the NASDAQ, 2% down on the S&P. It sucks, but it's not the end of the world. Tomorrow's going to be the exciting day if we rebound or not. Jet said rookie numbers. I lost 28,000 in one day. June says I lost 36,000 in one day. Yeah, it's bad, dude. It's bad. It's just 2020 was the big one. 2020 was when shit really hit the fan. Dude, I remember I woke up one day in 2021, like December-ish, and I looked at the portfolio and I was thinking of just deleting Robinhood. I was like, there's no point to look at this anymore. It's like, this is just stupid at this point. Let's just like move on. And like when you don't want to open the app, like when you legit don't want to open the app, that's when you know shit has hit the fan. But we need some hopium on Nvidia. So let's hear for why Nvidia is going to double in the next 6 quarters. Here we go.
Don't say often, right? And that in 2024. Of course, anytime we say that, that means really it's been a rough session for artificial intelligence stocks. And that's been a little bit now for a couple of weeks. Now, of course, today, the big downdraft sparked by scuttlebutt, the Biden administration ready to take extreme measures to ensure that China doesn't obtain these high-end computer chips. But even before today, this AI trade was waning a little bit, right? The big story has been a rotation into things like small cap. So the bigger question now, is the hype already over? Well, let's bring in IO Fund lead tech analyst Beth Kindig. Beth, you've been here before. Is the hype over, right? In fact, I've got an article. I'm going to put a headline from an article last year in InfoWorld. It was titled, When a Generative AI Hype Fades, right? Now, here's the thing. We've been told that this is the first or second inning of AI. Why so many people already jumping off the bandwagon?
Those are great questions. I am not jumping off the bandwagon. What I would say is that many fund managers were confused about AI in 2023, were confused in 2024. They're not realizing that what we have in our hands is an AI economy, not an AI bubble. This is evidenced by the real revenue, the real growth, the real profits. This is an AI economy because of those reasons, and we are looking to buy on this dip.
But okay, but right now it's an AI economy, but the picks and shovels part of it is that it's getting all the attention and where all the money is being generated. Does that mean you're still hot on Nvidia?
I am very hot on Nvidia. Right now, we're estimating a minimum of 30% upside. Analyst consensus for next year is $160 billion in the data center. We are tracking now $220 billion. There's your 30%. We have Blackwell coming at the end of this year. Hopper brought us here. Blackwell is going to exceed Hopper sales This company is not stopping at 30% is minimum, Charles. We could see up to 100% move over the next 6 to 8 quarters. And this is because there is a plenty of room in the PE ratio. It goes back to those real profits that we discussed around the AI economy. This company is valued low because it has grown 500 to 600% on the bottom line. That valuation is too low for this run to be over.
Yeah, we're not used to the E leading the way when they go parabolic like that. So we got these data centers, and I've read where you say this this whole thing now will cause a power demand. I want to make sure I got the number right, to increase 8,000%. And we've been hearing about this, and a lot of folks have pivoted their portfolio to that. But a lot of these so-called power plays have struggled of late. So what's the timeline, right? Because I know I've been around for a long time. There's the hype, which, these stocks go crazy, they go up. All of a sudden, these names don't meet the hype, they come back down. But over time, they eventually do. The hype does come to fruition.
Those are great questions. We have a pretty good idea of timing for AI power consumption because the next generation, again, Blackwell, I've been talking about Blackwell on your show for some time. It's finally going to hit at the end of this year. That's a 300% jump in power consumption over the next few months for these AI data centers. Liquid cooling is going to be necessary because we're crossing over the 1,000 watt mark on power consumption. I know that's a lot of jargon, but AI power consumption will be a leading trend by the time we close this year.
All right. And
again,
we're out of time, Beth, but I want to mention that I saw where you said you like AMD a lot, maybe as much as Nvidia. Is that right?
Absolutely. I actually see more gains in AMD. It's a lesser understood story. It's because they have the x86 and the ARM-based PCs. Plus, keep an eye out for Silo AI mentioned on the upcoming earnings call. I'm on the edge of my seat for AMD right now.
Okay.
AMD is down badly since that 225 pop it had a couple months ago. AMD right here. Wow, 144 on AMD today. What happened to the semis? Let me actually look at how bad it got. So ARM went to 157, down 9%. Dell went to 116, down 7%. Qualcomm down 7%. Broadcom down 8%. I did not look at the semis all day. ASML down 7%. On Semiconductor down 4%. Intel down 4%. SMCI down 9%. Another 2% after hours. AMD down 7%. And then Nvidia down 7%. So tomorrow is going to decide a lot because a beating like this, I mean, you get a beating like this, people usually step in and they put up a bid the day after. At least that's what happened for the past 7 months. If that doesn't happen, then maybe we're headed into a correction for the semis. This is a bloodbath though in the semis. I mean, the semis are down 2x more than the average Mag 7 at closer to 7%. The average Mag 7 down about 3% on the day. Beth is up 3,500% on Nvidia. Yeah, Beth Kinding, for those that don't know her, I follow her on Twitter. She's actually a very smart person, but she's been in Nvidia and some of these semiconductor names almost since 2019, 2018. So that's when she really started. She has a public fund. That's when she started, talking about it a lot a couple of years ago. So I do trust her opinion on the semiconductor names. She wrote an article the other day that I was reading around Nvidia to 10 trillion by 2030. I know that sounds kind of crazy, but that is kind of the core argument a lot of the broader AI bulls have on this economy. 12,418, her first buy in the fund. Yeah. So she's been in there for about 5-6 years now. On the semis. She's up 196% on AMD. She's the opposite of Kathy. Kathy went the Zoom teledoc route. Beth Kinding, just look her up if you don't know her. She went the semiconductor route and the Mag 7 route. So she went into the NASDAQ. Kathy went the opposite. And that's why obviously both have performed differently. Kathy's fund was down 7% as well today, 44.71. I don't think she sold Tesla. Wouldn't surprise me if she took some profits on Tesla, but if anything, I feel like she probably bought the dip on Tesla today versus selling it. But she hasn't bought since like the 170s. So it'll be interesting if she buys in the 200s. Ford is down 12%. Speaking of Kathy, let's listen to one of her minions. I say that respectfully, Tasha, around ARK and what's happening with Tesla, because she went on and she said that the earnings were great because of robotaxis. So let's see what she had to say on that. Kathy went the garbage route and she went the quality route. Yeah, basically, unfortunately. I hate to say that, but Yeah, Kathy didn't lean into AI. She leaned into like what she thought was AI, whereas Beth just leaned straight into the hardware and software applications of AI.
ARK invests Tasha Keeney and Guggenheim's Ron Yovsikov. Ron, I'm going to start with you because we've been teasing it like this, and I think this is correct. It's a bull bear debate here. I'm going to start with the bear, given the print we just got and some of these key misses, including, as I just mentioned, GAAP gross margin X credits coming in at 14.6%. You had said to us a couple weeks ago when the robotaxi announcement was pushed to October that the quality of Q2 earnings was going to matter more. Your thoughts today?
Yeah, I mean, I think the key takeaway, looking at the numbers, you mentioned the gross margins X credits missed, but I think the key takeaway is the second derivative of the business actually isn't improving here. I think there was some debate coming out of 2Q deliveries if the quality of deliveries was good. And the reality is we see with the gross margins X credits line this quarter missing by quite a bit that Tesla effectively bought a lot of business this quarter. And I don't really see how that changes going forward. We've already seen quite a few new promotions launched to start the third quarter.
Tasha, I want to get your thoughts on these results, especially since I know ARK is a long-term investor in Tesla, and you've come on the show before and laid out the case for autonomous driving and robo-taxis. But
Chipotle now selling off went from 13% up to now 4%. So market's giving back a lot of those gains right now.
Even if that is the future, it's arguably years away. So why buy the stock now?
Yeah, so actually, I think, when we're talking about robo-taxis, this is something that will happen, we believe, within the next 5 years. So in fact, our 5-year price target, we think that robo-taxis will contribute over 90% of the enterprise value of Tesla at that point. So I think, I'm looking forward to hearing more detail on the call. What we've been seeing from Tesla is, of course, incremental software updates. They have a latest version of FSD where it's very limited and it's released currently, but they're adding the functionality to take your hands off the wheel. They said in the letter that they expect the take rate of the full self-driving software to increase based on the increased functionality that they see. So I'm looking forward to hearing more about that rollout because I think to ignore robo-taxis today is a huge mistake with this stock because ultimately it's an AI play.
Okay. Ron, I don't understand the robo-taxi business model case. I mean, the entire market cap of Uber right now is around $141 billion. And if Tesla's robo-taxis wipe out the need for Uber and they take all of that, it's still not that much. Plus, if they're that good, doesn't that mean I don't need to buy a Tesla? And won't it be really hard to make the numbers work if people buy fewer Teslas because they can just get a robot-driven Uber?
Yeah, I think the argument that robo-taxi bulls would make, and again, we're certainly not one, but the argument they would make is that the pie grows massively. I think the argument we would make, and we're seeing this in China already, is pricing comes down massively and most of that excess profit and excess margin gets competed away. I mean, right now in China, Apollo, which is owned by Baidu, to be clear, is offering rides for just over 10 cents a mile. I think most robo-taxi bulls would view that as a very blue sky pricing scenario for robo-taxi models. So I think what we struggle with robo-taxis isn't that Tesla can't get there at any point in time. It is the timeline, but it's also what steady state unit economics look like, because even if Tesla has a $10,000 cost advantage in robotaxi, that's a massive cost advantage. Over 1 million miles useful life for a vehicle, that's a penny a mile. It's not that meaningful.
So Tasha, do people want to be driven around in really nice Tesla robo-taxis that are so high quality that they're going to pay that much for the ride? Why would robo-taxi be worth more than selling a whole lot of Teslas?
Well, you compared Tesla to Uber. I'd say that Uber has proven that the ride-hailing market should exist and there is demand for it. But robotaxis will greatly expand the current ride-hail opportunity. I mean, I think it could be a 10x or more expansion.
Right,
that's because
unless people stop buying cars altogether. I mean, there aren't that many more people or that many more places to go, are there?
So it's not about selling individual cars. It's about the utilization of the vehicle. It's about the miles traveled on the car, and you're paying per mile here, right? So today, we were just talking about China. Yes, ride-hail is priced significantly lower than the US in China. But in the US, Uber is charging $2 or more per mile, Tesla can undercut that price because it already has a lower operating cost thanks to its electric vehicle platform. Add autonomy on top of that, that really leverages that cost structure. And once you're able to lower price, you bring more people into the market. You start having, by the way, which is already happening in certain cities, young people will forego buying vehicles because they'll say, hey, I'm going to take an autonomous ride-hailing network because it's actually not that expensive. And in fact, it's cheaper than me driving my personal car if I account for the all-in costs. So I think that's what's really exciting here. And again, I do think that the US is where we'll first see this rolling out. I do.
Hopefully she's right, because if she's not, obviously the bull thesis on Tesla is gone, but I do think she'll be right over the long term. Chipotle just went red. It's showing that it's green right now, but it just went red. Dude, it went from up 14% to now barely up 1%. You know, the thing about it is, forget the earnings themselves. I do think the earnings, the beats on the EPS and revenue weren't substantial, but it was a good earnings. The problem is, I don't know how a stock goes up 14% when the broader market takes this much of a beating today, especially if the stock is already up year to date. If it could hold 5 to 6%, that would be amazing. But up 14% is a lot for a company that is already up 14% year to date that didn't have like the most spectacular earnings. Waste Management's down 5%. ServiceNow is still up 6%. Hopefully that can hold. IBM's up 3%. Chipotle gave back all of its gains. It was close to $60. Now it's back at 52. And then Align is down 10% on the day as well. Dude, that's tough. That is tough for Chipotle bulls. A lot of people on Twitter just got super excited for Chipotle, but I mean, that just, see, something giving up their gains that quickly after the close kind of shows you the market's a little hesitant to really want to give momentum or to give upside and expand multiples, because the market's just scared right now. And one of the reasons the market might be scared also is because of the election, and they don't know who the hell is getting in office. Is Kamala getting office? Is she good for the market? Like, I think a lot of those concerns are going to get factored in as well. Some breaking news on Amazon. Let's get to that right now.
On NBA rights, Julia Boorstin has details. Julia.
That's right. Big news, Morgan. The NBA has struck its next 11-year series of deals, signing new 11-year media agreements with the Walt Disney Company, NBC Universal, CNBC's parent company, as well as Amazon Prime Video through the 2035-36 season. As part of this, the NBA is saying that it rejected Warner Brothers Discovery's attempt to match the offer that Amazon had made for its package of games. Disney remains home of the NBA Finals, Christmas Day, ESPN games on Wednesday, NBA Saturday primetime on ABC, and NBA Sunday Showtime packages. NBC Universal to telecast opening night, new Sunday night primetime games, and Tuesday regionalized games. And then Prime Video also getting its own package of streaming games. Back over to you.
Dikembe Mutombo treatment.
So the NBA just signed a long-term agreement with Amazon, and they rejected some of the agreements with Warner Brothers. That means inside the NBA with Chuck and Shaq and all those guys, it looks like that show, unless Amazon picks up the show, that's gone, which is sad because that was the best show. I wish they would just do it on Amazon. I don't know why they can't do it on Amazon. Why does it have to be TNT? But that's part of the reason why most people watch those games, dude, is for that halftime show. Like that show's a big reason people come to watch. Oh my God. All right. So where's the market after hours? Where's the S&P? We're getting little bounces. Yeah, S&P is up a little bit after hours. ARK's up a little bit. AMD's up. Palantir is just still taking a beating, dude. 26.37. Again, if it goes to 25, it is still up 50% year to date. I know it sucks, but you could argue that it was running a little bit too quick. And going into earnings, I like it at 25 or 26 versus at 29. So we'll see what happens here. If it gets back to that low 20, 21 again, I think it's back up the truck. Just like Nvidia, I think if Nvidia gets to like 90 or 85, I think it's back up the truck. But I don't know. Do you guys think? All right, so here's the question. Do you guys think we get back up the truck moments this year? Do you think we do? Do you think we actually get back up for truck moments this year? Back up the truck means Tesla back to 175. Nvidia to 95, Palantir to 21, AMD to like 120-ish. What's another one? Google at like 145. Like that would just be like, it would erase so much of the year's gains that, I mean, you would have to ask yourself, like, what was the first 7 months even for, given if we get back to those levels? But do you think we get there? Do you think we actually get there? We could come back after we get there, but I'm curious if we even touch those levels, if we actually get a chance. Some are using August and September. That's why it'll happen. Where's Netflix today? I bet Netflix is at like 620. Netflix. Okay, I'm dead wrong. 636. Okay, so Netflix actually, so interesting. So Netflix only went down 1% today. I think that's probably because their earnings were really good. So the market, like the market just didn't see a need to sell them off, but I'm surprised that one held on with everything else falling today. So Meta and Microsoft is next week. We need to make sure these guys don't like screw it up. And I don't think they will. But the market needs to feel they're doing their thing going into the third quarter of the year. Bank, yeah, all the financials. If you're positioned in financials or REITs, you've been good. Even though it sucked for the first half of the year, you're doing better now. But even small caps, dude, small caps didn't survive today. Small caps still, IWM's down 2%. Like, it's not really, at one point, it wasn't really that much down today. And people were like, okay, small caps was the place to hide. But by the end of the day, it went down. Yeah, Palantir covered calls. If you had covered calls, you're doing okay. I have a friend who has covered calls for 30 this Friday. And he was sweating when we were at 29.40 the other day. And now he's doing okay. So again, with covered calls, it's really just a question of being able to effectively know how to roll them. Because if you do believe Palantir or whatever stock is overvalued at 29.30, you can keep rolling the same strike, just extend the expiration. You'll get paid to wait. And unless the stock does a Nvidia and goes to like the moon, then eventually you probably, get to get out of your covered calls and make money on them. But I think all of us are thinking, does Palantir's Nvidia quarter end up happening in Q2? Tyler says, in an election year, the first week of August is huge, and guess who's reporting their second quarter earnings? Yeah, but it's not about Palantir or Robinhood reporting in August. It's about what is the market sentiment going to be for the broader ecosystem going into that first rate cut. So Palantir, like otherwise, it's just going to be a Chipotle scenario. Let's say Palantir pumps 10% because it's the first week of August, and the first week of August tends to be good. But the S&P is on a downtrend back to 515, which I don't know if it will be, but I mean, it's possible, right? But I don't think that would happen. Then it doesn't matter. No one's safe at that point. Like Palantir will get sold off, just like Chipotle is now giving up a ton of their gains as well. And if we get a little pump like that, a little pump is nothing, right? You want something sustainable that can hold on. I would rather have Palantir not give us any gains for the rest of the year and hold off at 26 because we would be up 60% for the year. Like, give me that any day of the week versus try to get to 32 and then come all the way back down to 24. Like, that type of volatility, I don't think is that healthy versus a slow and steady grind back up. So reporting in August to me is even Robinhood. Like, I'm super bullish on Robinhood. I think they're going to crush earnings, but I cannot say Robinhood on August 5th is going to go to 25 like I thought it was a couple weeks ago if the market is just not in the right spot, because they could have the most phenomenal earnings. I then have to reevaluate the options that I'm holding. Hey, if the market's really taking a nosedive, maybe those need to get exited, and we'll have to evaluate after their earnings, because Robinhood could have a great earnings. The problem is, if people aren't trading as much and stocks are coming down and things are selling off, then that means their next quarter is not going to be as good. And so the market's also going to price in, well, how do we, think of Robinhood's future growth? Again, when you're buying a stock, you're buying for future cash flows. If Robinhood's not going to have as much future cash flows as they had in Q2. So I guess we'll have to see. We will have macro data. We'll have PCE on Friday, so that'll be important. Rate cuts and weakness is not a good sign, and we might go even down. Yeah, and now again, I don't want to fearmonger here. I don't think the market's in trouble, and I definitely don't think we're having rate cuts into weakness, but we are showing signs of weakness, which is why the cut is inevitable. But we don't need unemployment going to 4.5. Right now it's at 4.1 in September. If that's the case, everyone's going to start thinking the Fed missed it the way they missed inflation being transitory in 2022. And it's like, we just can't have the Fed mess up again twice. Could you imagine if the Fed somehow delays the rate cutting cycle, just like they delayed the increase cycle? I don't think they will, because September will get the cut, but it would just be the most colossal screw up by the Fed ever. And it would not be a good situation for Jerome Powell. I think we get GDP estimates tomorrow. Yeah, I think you're right. I think we get GDP estimates tomorrow. We got housing data yesterday. We got ISM today. What was ironic, though, is ISM on manufacturing showed a contracting economy today, but ISM on services was above 50. It showed an expanding economy. And that's where you have Jerome Powell come in and say, well, we can't cut too soon because you got some parts of the economy that are actually inflating, other parts deflating. Overall, we're seeing deflation, but that is what kind of, I think he sees those stats and he thinks, well, I don't want to go too soon. Because I think a lot of experts would say, like the Jeremy Siegels of the world. Did you guys know Jeremy Siegel, the guy on who's on CNBC, who has like a funny voice, and he's an older guy from the University of Pennsylvania. He wrote an op-ed in the Wall Street Journal 3 months before the market collapsed in 2000. And that article is what made him famous. So he wrote an op-ed. If you look it up, Jeremy Siegel, Wall Street Journal, market bubble collapse, whatever. I think it was March 2000 he put it out, and then like April or something. Or he put it out in January and then April. But basically he put it out a few weeks or a few months before everything hit the fan. And the professor, yes. And that article is what made him famous. Because that article is, and then obviously the shit hit the fan, right? And he laid out all the reasons why things are going to collapse. And he wasn't trying to even be bearish. He was just he wasn't like a perma bear. He was just saying, hey, like, this is a bubble. And he predicted it accurately. And that's how he really made a name for himself. Again, sometimes you just need one event. Michael Burry, Cathie Wood with Tesla, right? You just need one thing and you can kind of cement your legacy. And if you can get more than, one or two things, then you really become established in the finance space. But he's been saying the Fed needs to raise cut rates for about 4 months now. So you've got, when I say experts, I'm thinking about people like him that have been saying, hey, the Fed needs to cut. It's time for the Fed to cut. And the Fed just hasn't cut. Again, it's like buying the dip today is not fun. It's not a fun thing to buy the dip today, but you do it because like the proper way to invest is that you want to get shit when it's down on a discount, not when it's up. So it's not fun for the Fed to cut rates when some of this inflation data isn't that good. However, if you're the Fed, you're supposed to know that the inflation data eventually is going to be good. Just like if you're buying Nvidia today at 115, eventually it'll be worth 115. And so you take a bit of a risk and you do what you need to do. The Fed, the problem is they wait until they get so much data that by that time, the stocks run and you missed the run and now you're just going to be bag holding. So I don't know. I expect a September cut. July would be a surprise. I don't think we get it, but it seems like July is what we need to do now to calm some of the weakness. Germany's economy contracted based on numbers which came today. Yeah, even Canada, they cut rates again today. So in England, they cut rates a month ago. So why are they cutting and we're not cutting? Is inflation really that bad to the point where we're not cutting? Even oil. Let me check oil today. I didn't check that. Oil's up slightly today, but oil's still under $80. It's at 77 right now. I don't know. It feels like we do need to think a little bit more deeply around, what this cutting cycle looks like. So again, going back to my point, I don't think the economy or the market is in shambles, but I do think choppiness is on the way. And tomorrow, like I just got a text from my friend on Twitter. He said this is the worst day I've had in the market in like a year. It's crazy. Everyone, no matter where you were outside of like Enphase or Bitcoin today, everyone has been hit today. And my big question tomorrow is going to be, does the market step in and they say, okay, 565 to 540, that's enough. We want exposure. Or do they get greedy and do they want 520, 530? And then they buy. But if they don't get greedy, everything's taking a hit. Nothing's surviving. Like CrowdStrike, that's going to 240. If the S&P falls another 5%, Palantir is probably going to 22. AMD is hitting 120 if the S&P falls. If the S&P falls 5%, that would be a 7% correction. 5% of this price would be another 27 points. That would put us at 513, which is still up from 480 at the beginning of the year, but it would be down from that 560. I guess we'll see. Just practice buying lows and eventually you won't see your portfolio red. Yeah, and again, for those that bought the dip, I commend you today. Don't let people tell you that, you bought a little too high or whatever. Like when you buy the dip, it's not fun to buy the dip, and you will never perfectly buy the dip. You know, like Tesla will go to 215. If you liked it at 219, then, you know, you can't beat yourself up thinking, oh my God, I could have got it $4 cheaper. It's like, no, dude, it's like you buy when it's red, you live with it, and then you hold on long enough until it goes green. And that's just the nature of buying the dip. But it's not fun. It's definitely not fun buying the dip. Okay, I want to show you guys this. So the Senate and the House of Representatives is voting right now on trading stocks. So potentially today we will get a bill, or not a bill, the bill's already there. We will get a vote on stock trading being banned. Here are a couple senators talking about why they're doing this today.
The historic nature of this finally getting to a vote. There's been a lot of talk about banning stock trading by members of Congress. Never have we been able to get a vote. We're going to get that vote today. And I just think that this is such a simple proposition. The American people, when I go home and I say to folks, they ask me about stock trading, here's the thing that absolutely stuns them. They can't believe that it's legal already. They can't believe we can currently do it. Most members of the public think it's already banned. And when I say actually it's 100% legal, they say why? And there's no good answer to that question. We should be here to focus on the public's business, not private gain. We shouldn't be here day trading. We shouldn't be here focusing on our stock portfolios. We should be here doing what the American people sent us to do. And that's what this bill is about.
Okay, so that's his bull case. Now listen to Mitt Romney's bear case for why he's going to be voting against this bill. Let me know if you agree with Hawley or Romney's take on the bill.
And I agree with all the statements that has been made. We don't want people in Congress trading stocks or playing the stock market. That's, if you will, the sheep's clothing over this wolf piece of legislation. What you're not talking about is that this has been drafted in a way that is really quite thoughtless, which is it requires divestiture for people who want to become a congressperson or president or vice president. And we had a briefing beforehand to talk about, does the bill deal with, for instance, private investments, private enterprises? And we were told, no, it doesn't. And in fact, it does. And that was corrected a day later. Staff sent a memo around saying they were incorrect. That actually does deal with private enterprises. What that means, for instance, is let's say there's a family that incorporates their farm. All right. They have a C Corp that incorporates the farm. Someone wants to run for political office. They got to sell it. They got to sell their interest. Have you thought about Donald Trump, for instance? Under this bill, he couldn't become president. I mean, he'd have to sell all of his Truth Social stock. He'd have to sell all of his private investments.
He's probably going to do that anyway, but
this basically would prevent Donald Trump from becoming president if he wanted to maintain his financial assets without getting completely obliterated. So yeah, we don't want to have people trading stocks. Had the legislation been drafted to prevent that, I'd support it. But it calls for divestitures of all sorts of assets that people would have that will prevent them from running for political office. It is a wolf in sheep's clothing because it's been drafted in a thoughtless way. It makes us all very happy. By the way, it's not going to affect me one way or the other for two simple reasons. One is I don't have individual stocks. I bought mutual funds when I got into political office because I didn't want to ever have anyone question whether I was working on behalf of the public or myself. And number two, I'm not running for office again, right? So it doesn't apply to me. I'm saying this as an American concerned about being able to attract good people into political office. And if we tell them, you've got to sell family businesses, whether public or private, you got to sell all your securities. These provisions are extraordinarily detrimental to being able to attract good people into public office. So it's a noble cause, which, by the way, is a messaging bill.
What do you guys think? So Romney's argument is, hey, someone like Trump, who has a ton of private assets, he would have to liquidate all of that to become in public office. Someone like Hawley says, yeah, he should. Like, why is the president also having 60% of the stake of a public stock like DJT that's being traded? Or why is Nancy Pelosi, who's meeting with people in Taiwan, also owning Nvidia stock? Nvidia is heavily affected by policy that comes out of Taiwan. Like, there is an argument you could say that public officials should get rid of all their private equities and just own mutual funds. But for Romney's argument, his point is like, well, you're not going to incentivize the best people then to run for office if they don't have any assets in individual businesses or equities, etc. I don't know. I don't know if that's necessarily the case. I feel like if you can still own some types of assets, but they're not like very specific individual stocks, then you can still be invested. It's not like people are saying you can't invest. It's just when you're running for office or when you're in office, if you own Palantir and there's a government contract coming out, you obviously have an incentive. Like you can't deny it for Palantir to get that contract if you have Palantir. Like it's just so simple. And I think that's the conundrum, which is what Hawley is making in terms of his point. Yeah, some people here are 50-50 on this one. Both do have valid reasons. I agree. I like Pelosi being able to trade because it just tells us what to do, quite frankly. So like, we're waiting to see, did Pelosi buy the CrowdStrike dip? Did she sell? Like we're just trying to figure it out. But in general, it's probably not the most ethical thing. Chamu says, I would support the bill. While in office, you can't trade assets halted while you serve, just like there are things I can't do since I work for the government they shouldn't do while they're in office. Once out, yes. Yeah, that's a fair point as well. Your assets are halted while you serve so that there's no chance of impropriety in terms of the system and how you may be interpreting certain policies. I think logically it makes sense. Do I think it's going to get voted on? I don't know, dude. The Congress people would have to be voting against their self-interests in this one. And given what we know about Congress, I don't know if that'll happen. The vote, we're going to know about the vote in like a couple hours. I think they're still voting on it. I think it passed the House, but now it's in the Senate, if I'm not wrong. Yeah. So we should know by tonight if it's officially banned or not. And we'll see. The ban will take effect when they leave. Yeah, basically. Once they leave, the ban will take effect. All right, we need some bullishness. So let's listen to Dan Ives. It's been a tough day. Let's get him to make us believe that the tech revolution is never ending. Here we go.
We got to switch gears to talk about Google as well here. Alphabet, what is going on? I mean, you look at the NASDAQ 100 and we're looking at something that looks a little like a tone change. How do you feel about the sell-off?
I mean, if you look at it's an A+ quarter. You know, you could argue YouTube and what they're spending on CapEx, but that's good money that you want to see because what are they spending on AI? To some extent, Google is narrowing the gap versus Microsoft. You look at those Google Cloud numbers on a growth trajectory of 40, 50 billion. That's the key to, we think, $34 per share of the story. Now, I get it, the knee-jerk reaction, stocks run huge, but I actually, when I look out in the next 3, 6, 9 months, the mojo is back at Google, not just on advertising and search, but in AI. And from an AI cloud perspective, that's key to the sum of the parts valuation here. And that's why I think it's very easy to get caught up, and this is how we've handled investors last year and a half. Soon as tech sells off, that's it, alarm. But it is 9 p.m. in the AI party.
It's 9 p.m., folks. It's 9 freaking p.m. This party has a long way to go. We didn't even do any blow yet. Okay? It's 9 p.m. We're just getting started.
That we think goes to 4 a.m. So I get if you want to look at that from the outside, we like being in that part, and I think this plays out. It's part of our tech bull thesis.
So Alphabet's going out to get more beer for this party.
They're not even on the dance floor in the AI party.
All right, so here's my question when it comes to Alphabet. The comps get a lot harder going forward. It was already kind of hard for the second quarter, but for the second half, it gets a lot harder. So what do investors hang their hat on in the second half of the year as Alphabet continues to spend and investors don't get the payoff that they're looking for from these investments in AI?
Well, I've talked, and my colleague and I, Scott Dev, have done great work here in terms of all of our survey work showing advertising rebounds happening. You look what's happening on search; those are strong numbers. Those are drop the mic tight numbers. Now you look at YouTube, clearly around the edges, some weakness. Margins are going to continue to increase. You look at that Google Cloud, GCP, Google Cloud is key to what Kurian and the company are doing in terms of the valuation, just like we'll see from Microsoft next week, like we're going to see from Amazon. There's a cloud arms race, a Game of Thrones, a House of Dragons, whatever you want to call it. That to me is why I believe this continues to still be a 1995 moment, not a 1999 moment. And that's our view of tech here in handholding.
If investors woke up today after months of saying we like CapEx and say, no, this sucks now, then how do you get past the next couple of months? I mean, you look at every tech company is going to be announcing their CapEx spending. If it's tough to spend, then how do you get through it?
Look at Apple at WWDC when I'm sitting there, stocks down 190, everyone's disappointed. look where it is today. What's changed? It was a digestion of investors understanding that the consumer AI revolution now goes through Cupertino. When you look at CapEx is key to the second, third, fourth derivatives. That's how this AI revolution plays out. You look at CapEx increasing from Google, you look at what we're going to see from Amazon, Microsoft, Apple, Tesla, and others. That is positive. And that to me is why these dips, you own the winners, despite many of the bears continuing to look, they like to own value, right lane, 55 miles an hour in a minivan. I get it. But I'll pay up for the Bugatti 100 miles an hour in the left lane, and that's why we want to own tech.
Bugatti, baby. You heard Dan. Sometimes you got to get in the Bugatti. Sometimes I know everyone is so annoyed at the analogies because it's a red day. I get it. But you've got to give it up to his consistency around the messaging. First of all, he's been right all year. And so it's not like his tone is going to switch because there's a sell-off on a random day in July when the market's been up 20% all year. And I think his point about CapEx is 1000% correct. Palantir doesn't win if Google's not spending on CapEx. We need the software applications of AI to be able to be supported by the hyperscalers that are spending billions. At this point, Google's on a $52 billion run rate in terms of the amount they're spending per quarter on AI in order to make sure that enterprises actually have the IT build out they need. The models, for example, Gemini needs to become a real model so that Palantir can use that model, connect it to your business data, and then sell you outcomes in your business. Like these things need to happen. So the hyperscalers selling or buying all this CapEx is not only bullish for the semis, it's necessary for the first, second, third order derivative companies, as Dan Ives says, in AI to work. But his argument is the market has to digest that. And today the market is throwing it up. They are not digesting that at all. Yeah, we saw the NBA deal with Amazon Prime. That was a big deal. And TNT no longer is going to have inside the NBA. But in general, look, until we legitimately see a pretty rough correction, which is possible, I still think this year ends out pretty strong. Robinhood getting wrecked after hours, 21.14, down 1.26%. There's no news on Robinhood outside of the fact that the market's falling. Robinhood just gave back basically 2 months of gains, which sucks. But again, investing is not easy, right? It's like it's fun when Robinhood's at 24.50 and everything's awesome, but like this is part of the game, right? Things take a hit and things can take a hit randomly. If God forbid anything had happened to Trump that day at the rally, things would have taken a hit that day. Like things happen, and we just kind of got to weather the storm. I am curious tomorrow. Tomorrow's going to be a very important market open. How does the market respond to this sell-off? I'm really curious. Do the buyers come in or are they willing to give it a little bit more pain? Let me see what was green today. So we looked at, obviously everything was red, but the stocks that hit new 52-week highs today. Lockheed Martin. They had a good earnings yesterday, so they hit a high. Philip Morris, Fiserv, Spotify. Spotify, again, a growth stock that probably should have tanked with the market, but their earnings were so good that they just kept going. Truist, Regional Bank, an energy company, TRP. First Citizens, another regional bank. Got some other names here, but primarily value. Western Alliance Bank. Wow. So the regionals did well. Spotify, one of the only growth names that did well. Enphase, not a new 52-week high, but Enphase did well because of their earnings. And then some of the value names like Lockheed, Philip Morris, Fiserv, Boston Scientific, etc. Duke Energy, that was up. So some of the money rotated into regionals and energy today as well. Alex, thank you for the $2 super chat. Hold your ground, my friends. We're long. We are indeed long. So again, I think a lot of the sentiment right now is definitely negative, and it should be when things get red. But I don't know if it's like a panic moment because again, and this is what makes buying the dip hard. Buying the dip is hard because you have to buy when no one else wants it. Same with CrowdStrike, dude. Like I'm actually getting really excited to build a real CrowdStrike position because everyone hates it. The few people that I'm talking to that actually like it, they're agreeing in terms of how they really see the market's kind of overreaction to it and the broader sentiment that is so, I mean, people really think it's like going out of business or something. And you're getting it at the cheapest discount you've ever been able to get. So if we get an S&P collapse of 5%, CrowdStrike's going to 220. I mean, that's just like an exceptional name to pick up. Palantir again at 21. Oh my God. would I love for Palantir to get back to 21? Not because I want to see it go down $6, but like, dude, I'll buy another 1,000 shares if we get to 21. Like if we get to $21, that's an absolute no-brainer. So some of these names, we'll see how they end up playing out. But I don't know if we get the low back up the truck type of dip. That's what I am going to be curious about over the next couple of days. Do we really see that type of downturn? Because maybe we do, but if we don't, then I think buyers actually get more excited because they think they missed the dip and now they come in and people start buying. Let's listen to Ed Yordani. He's been pretty bullish over the past couple of years as well. Same thing with the professor, and get his take on this sell-off right now as well. All right, here we go.
Ed, we are hitting new lows here, down 2.4% or so in the S&P 500. Kind of easy to say, well, we were entering a tough seasonal period. The biggest stocks in the market were crowded and expensive. We needed this pullback, but is there anything else going on that would concern you?
I think you covered it all, Michael. But look, I think that usually in a bull market, you do every now and then get some sell-offs. And this one is a nasty one. I think it's going to turn out to be an official correction in the Magnificent Seven. But
okay, so Ed believes we're probably heading to 5 to 10% down, which means Meta to 400, Nvidia to 100, Tesla below 200. If he thinks that's what's happening, and it does end up happening, then we will get some cheaper prices in his eyes.
I think you're also saying, as you pointed out, that some money is going into the rest of the market. It's not everything is down today, but the big decline is in the Magnificent Seven. I think that when you look at the underlying fundamentals of the economy, I don't think we're going to get an economy-wide or S&P 500-wide correction of 10% to 20% because I don't see a recession out there, and I don't think investors are actually worrying about a recession, given that the Fed has basically promised that they'll lower interest rates if that's necessary, and I don't see a bear market. So I think this is a sell-off. They happen from time to time. This one is nasty because it is a correction in the Magnificent Seven.
Yeah, and in fact, just now the NASDAQ 100, which basically tracks the Magnificent Seven, has clicked to an 8% pullback from its record high. So pretty far along the way to that 10% move. Now, you seem pretty confident that the economy in general is chugging through pretty well here. It seems, though, that given what the bond market is acting like and given the new rhetoric on, hey, what's the Fed going to do? Maybe it has to get more aggressive on the easing side. It seems like that worry is going to hang with us for a little while.
Well, let's see tomorrow. Tomorrow we're going to get GDP, and it'll probably be up 2.5 to 2.8%. So suddenly people will realize the economy is still doing well. And then on Friday, we're going to get the consumption deflator inflation rate, and that should be up 2.4%, down from 2.6%. So the fundamentals are actually looking, what other words can I come up with? But wonderful. They really do look good. And I think, even the earnings numbers on balance, we're getting upside surprises, not downside surprises. I think, maybe people just recently concluded that Tesla is actually a car company instead of a technology company until Elon Musk will come up with something new to excite us about for the company. But all in all, I think this is a short-term sell-off.
Yeah, and in fact, we all have been through earnings seasons where they come in these phases where it seems like big downside surprises and sets the next big companies up for an easy hurdle to clear. Just quickly, Ed, just remind us, where you sit in terms of your formal targets for the S&P at this point, now that we've tipped back below 5,500.
Yeah, well, I managed to pick the top in this particular move because near the top was we had crossed the 5,400 a while ago and got to something like over 5,600. And I said, look, by year end, I would raise that to 5,800. And I still think that's the case because I think the economy is going to prove to be resilient. I think we are going to get one rate cut, and I think we'll have less political uncertainty after the November election, and the market will learn to live with whoever's in the White House. So 5,800, 6,500 over the next year and a half.
Okay. All right.
All right. So we got the bulls that are feeling a little less bullish today, but overall long-term still bullish. Like the Dan Ives and the Eds of the world. Dan is as bullish as they can get. He's still at this party, but stocks in general, it's still taking a beating. Palantir 26.33 after hours. Ford is down 10%. Chipotle, wow, Chipotle gave up everything. Chipotle is up 0.9%. It was up 14%. IBM's up 3%. ServiceNow still holding on, which is nice to see. That's good for Palantir. Waste Management down 5%. KLA up 3%. And then Align down 4% after hours. Okay. That's it for me. I think everyone should go get some good food today. Go relax. Go take a walk. It is what it is. Tomorrow is going to be a hell of a battle against the market because the Bulls and the Bears are going to be at it tomorrow. I mean, tomorrow, like the Bears are coming out of hibernation today. They are absolutely, is that a Dan Ives line? I think that's a Dan line. The Bears are absolutely waking up today. The amount of bearish comments I'm even getting on Twitter, it's hilarious. I mean, like the entire market's up. These people have made zero money this year. Like some of these people have made no money. And it's like they have the audacity to be like, well, it's time for everything to collapse. Maybe it's time for everything to collapse, but it's going to be a fight tomorrow between Bears and Bulls. And either the Bears are going to get to double down on their statement. A lot of them are not actually short. They don't have their money where their mouth is, but they just like to troll. A lot of these people exist, but some of them are short and they're making good money. Most of them aren't. So that's going to be in play with the market tomorrow. Sentiment's going to be in play in the market. Or we're going to need Bulls to come in and say that, no, this is ridiculous. These are amazing discounts. And maybe that happens. Maybe that doesn't happen. Tomorrow before the bell, we have Stellantis, Unilever, and a couple other companies. I think Raytheon tomorrow as well. After the bell, we have Deckers that just got into the S&P 500. Texas Roadhouse. Hopefully they don't have the same problem that happened with Chipotle where they go up and then they go down. And then we have a couple other companies. Oh, and Skechers tomorrow as well. So we will have to see. Some guy told me today that CrowdStrike is a meme stock. Yeah, see, it's like, I don't know, dude. I mean, some of these valuations obviously are a bit stretched. Meme stockish, GameStop and Chewy compared to CrowdStrike doing 3.4 billion in ARS. Like that's where a lot of the bears get very excited. I mean, I've seen bears today on Twitter saying Nvidia is going to 75 by the end of the year. They got Palantir at 15. They got Tesla at 122. It's like there's a lot of arguments there. And maybe they're right. I don't know. Like if we have a green day tomorrow, everything changes. Sentiment goes different. Like imagine the Nasdaq goes up 3% tomorrow. Now it's like, no, you got to be back into the markets. You're missing out. So I don't think we have a green 3% day tomorrow. I don't think we have another red % 3 day. Although I would love us to just go down 10% tomorrow and like get it over with. Like sometimes you got to rip the Band-Aid off. If we need a correction, like, okay, give us a correction. Let's move on. But like the slow burn over the coming weeks and months, that's the part that's like just sucks. I'd rather like go to 494 tomorrow on the S&P and just like move on to their lives versus have to see if it comes down. But there will be a lot of discounts if we do continue to get a red day tomorrow. Let's see. Let's see what happens. All right. Thank you everybody for being here. We'll be back tomorrow, 8:45 a.m. As Ricky says, you need to be able to react and not just stick to your convictions. That's correct. If you're long on a name, then you need to understand why you're long and if you need to reposition your portfolio. So that's also really important. The easiest way to handle what's happening right now, if you're not like a trader or you position size your portfolio, is if you're long, you don't have to actively buy the dip. You can just wait and see until you get a good deal, especially if you're not planning on selling for the next 10 years. Like it is for Palantir with me, right? But if you have options or other sort of things, then you definitely have to figure out kind of where do you think the market's going and where appropriate exit strategies ultimately can form. All right, cool. Yeah, we'll see GDP numbers tomorrow. That'll be important. Hopefully that's revised a little higher and that'll be some good news also for the broader markets. All right, thank you everybody. 8:45 a.m. We'll be back tomorrow. Also, tomorrow we're streaming Biden at 8 p.m. He's given that address. So we'll stream that tomorrow at the end of the day as well. All right. Bye, everyone. Have a good one. Talk tomorrow.